Well, good morning. I guess I'm getting started early. I'm having a lot of technical difficulties here this morning, so I apologize. I must be having some type of interrupt issue where when I start streaming anything I had playing in the background, it starts to just crash. So basically, all my YouTube and streaming do not work together at the same time. I don't know. But good morning, everybody. So what I wanted to kind of talk about today was I see a lot of panic going around, people who are getting very kind of upset by different things, maybe more emotion, panic than I see that I'd like to see from people when times get uncertain. So, but as usual, it's not I'm not a licensed financial advisor. This is just my opinion. If you were to take trades based on things you see or hear here today without doing your own research, you're going to end up losing all your money and living in a van by the river. So with that disclaimer out of the way, let's see if I can play this video without it crashing on me. Because, yeah, my computer, I've got to figure this out. Every time I go live, I keep forgetting every time I go live, I can't play YouTube. It just crashes when it's the streaming software. So let's see if I can't play this little video clip here about what we're going to be talking about today. Let me back up just a little bit, make sure we get it all.
Logic offers a serenity humans.
I always forget it does this.
Seldom experience. The control of feelings.
All right, that's not going to work. That's so frustrating. This used to work, it doesn't work anymore. So it was if you watch the new Star Wars movies, what that is that's a quote from Spock's father telling him that logic offers serenity that humans seldom experience. And it offers freedom from fear or something along those lines. I don't remember exactly what he says. But that's what I kind of want to talk about today. What I see happening every time we get uncertainty in the markets, I just see people getting very upset and emotional. I've seen a lot of angry outburst posts about things, and clearly people are getting shaken around by this market quite a bit. And so what I wanted to do is just take a step back and let's talk about if you're in that state, if you find yourself in that state, yes, where you're getting very frustrated, angry at others, and you're just going through this cycle of emotions. Well, what can you do? First of all, you might want to increase your time preference. Is just kind of the first thing that comes to mind to help calm things down. Because what happens is when people get started with trading or investing in crypto, now I want to keep this both investing and trading. There are people who were not looking to trade, that just wanted to buy an asset and hold on to it, and they hear all the narratives, Bitcoin's going to the moon, whatever else is going to several $100,000, and they buy in at the top, whatever, and they want to hold and they want to be long-term investors. But there are those who want to actively trade this market too, which is a different game. But for both classes of people, if you buy clearly at the wrong time and the market goes against you, well, you have to know what you're doing, why you bought, and what your long-term game plan is. But if you're getting really, really emotional about all this movement, like for example, on the way down here, I can see lots of opportunities that people thought, we had several traps on the way down where people, wanted to buy different points, thinking it was bouncing, right? And I can tell every time that we get a little sell-off again, people just get extremely upset. And so if that's you, there's a couple of things that I would recommend. One is try zooming out a little bit. Try lowering your time preference if you're getting shaken around by the market. And the reason I say lower the time preference is because if you find yourself buying and selling very frequently on the way down here, of course you're getting just destroyed. Especially if you're trying to buy what looks like maybe a breakout, and then you're having to capitulate, sell on the way down. That's clearly not going to work out well for anybody, right? The game is very simple at this point. Like if you look at this particular chart, and this is just, I've overlaid, if you go back to I have a Twitter post here. Let me pull it up again. Sorry, since I'm technical difficulties again. All right, so you see long term, we might be in what's called like a re-accumulation pattern, a Wyckoff re-accumulation pattern. So what you see here on my screen is just the overlay. So this chart right here is just one I grabbed, a re-accumulation schematic. This very well could be what we're setting up for long term. But the game is really pretty simple. We've lost momentum. We're in a downtrend, right, for this section of it. Now, it depends on your time frame. You could still argue we're still in an uptrend in some time frames, but realistically speaking, we're in a downtrend. We've lost a lot of these moving averages. These 50, 120, and 200 are the main ones that I watch. People watch different ones, 20-week EMA, different weekly and moving averages. But we're clearly in a downtrend. So the name of the game is simple. You have to wait if you're wanting to be on the long side, right? You're wanting to add back to your position. It's never productive trying to catch these falling knives because you just never know when the momentum is going to change in the other direction. But again, you look at this trend line I have here. It's going to be a pretty simple indicator that the trend is starting to change when you break this downtrend trend line. And we had it last year. This just very simple strategy of waiting for the downtrend to break. You can see all these downtrends. That's a pretty steep one right there. You can see how it would have worked to your advantage just to wait for it to break the downtrend. Right? So that's the first thing, is we want to just wait patiently, and this is where I think people also are obsessed with trying to catch the bottom. And I know it sounds cool and flashy on Twitter to try to say that you timed the bottom and you got the very bottom tick, but it's really rare and extremely difficult. My trading style, and you may have your own trading system and trading style, and if you do, if you're successfully executing that, you're not one of the ones getting emotional and upset about things. But my trading system is more of a long-term trend trade. So what I'm wanting to do is I'm wanting to catch the best part of the move, especially the upside. I don't really short very often, if ever, but I'm wanting to catch the breakout to the upside. So I want to ride this move from here up to, maybe take a little bit off of these moves and up to as much as I can into this area and then sell as things start to roll over here, right? I'm not looking to try to catch this bottom or this top or this bottom or this top. That's a losing game. If I try to catch that bottom and that top, which is what people are obsessed with trying to do, they want to catch the very bottom and the very top of the move, you're going to end up buying 1,000,000 points that you think is a bottom and then having to capitulate sell when things go lower on you. So the other key indicator here is just some moving averages are great for just keeping yourself sane, knowing what direction the market is heading. We're underneath this moving average, it's heading downward. So we want to reclaim this moving average. It's another very simple one. We want to break this trend line. You can start to add to positions, and then you can see what happens as you come into these trend lines. But that's more technical. The other thing that we want to take a look at is there's a lot of people as well on the other side of this market that think that we're going to roll over and go to much lower numbers, right? So there are people that are already talking about breaking this support area right around $28,000-$30,000 and heading down lower. And so those same people, they're getting way ahead of themselves. That's just the truth. Now, you can take that play when you get there. Should you lose this support, everybody knows that this is going to be a support level right through here, these lows. So let me go to a different chart. But it's also not logical and impatient to say that you assume that this is going to go below this point, right? Nobody knows where the bottom of this move is going to be when we break to the upside of this pattern. We clearly are in a very strong downtrend pattern. It is going to break out and bounce at some point. Nobody knows where the bottom of this move is going to be. Nobody knows if we close below these levels down here and then make a run at even lower levels. I mean, the worst case scenario I would say is probably the prior all-time high, right? You've probably heard a lot of people say the prior all-time high, or even some people are saying this like swing high, these levels down here. But that's also getting ahead of ourselves. The fundamental picture isn't that dire. Like, there doesn't appear to be that much downside. But I will say, on the other hand, the reason I'm talking today about being calm and remaining calm is it's kind of becoming clear to me that we have another capitulation spike down coming ahead of us. I don't know that this I don't know ended up being enough of a capitulation move down. We might need another more severe capitulation sell-off, which I think is still ahead of us. So if we were to get that price action, this is also where I want to see people, out of myself and everybody else, remain calm about these moves. I might drain it down. Let's see if we got some comments here. Good morning, River Dwellers. Emotional Regulation 101. Yeah, so the logic, the other thing is there's lots of indicators telling us that we're getting to the bottom of a move. And for example, Will Clemente put this one out here, the entity adjusted dormancy flow. What I do want to bring your attention to is this particular chart. I was looking at it too myself. If you look at the actual capitulation move though, from 2019, what I want to highlight is that we entered the green buy zone around like $8,000 and it went all the way down to $3,000. So just because we've entered that buy zone doesn't mean price can't go lower, but we are clearly getting pretty close to a capitulation bottom here. So there's a lot of indicators that tell us that we're getting close probably to a longer term bottom, but nobody knows where that is. And the smart thing to do is just to relax and to be patient. And so you might have seen me on Twitter and in Discord talk about how I've been selling these little moves into this trend line. I've been selling and trimming into the resistance here, and we sold on this rollover right through here, right? So those are places I've been looking to sell. Why? Well, first of all, I don't know where the bottom is of this move. Sorry, one second. And residual impact of so my camera isn't working either this morning apparently, so you guys can't see me on camera. Having some residual I guess once you get over COVID, it takes a little bit to get your everything back to normal, because I'm still got a little bit of a lingering cough. But so yeah, we've been leaning in and selling. And why do I sell here? Well, because A, I don't know where the bottom is. And B, though, if it were to break to the upside, this is a small insurance policy to pay to have some funds freed up in case the price continues to go lower. But at these levels, right, if I were to sell here and we actually were to break out, we're probably going to come back and retest, and I'll be able to buy back in almost the exact same level. So it's almost a net neutral move. Now, at this point, this downtrend is getting pretty severe. When we do break this, I would not be surprised if it moved, you put in a lot of very large green candles like we did in summertime. But, again, looking at just remaining calm, looking at this downtrend structure, what the smart thing to do is to wait for this structure to break to the upside, and then take advantage of that to strike, to make a move. But until that point happens, the other thing that I really want to highlight today is the altcoin market. So the other thing that I'm seeing is I'm not seeing capitulation in the altcoins, and I think this is where it's going to be even more severe. So for those of us who are heavily invested mostly in Bitcoin, it's painful enough watching Bitcoin go down, watching the broad market sell off, but the altcoins I think have a really I'm waiting for a bigger capitulation event, especially in the altcoins. So you can see the Bitcoin dominance chart I've got pulled up here, long-term chart. We had a very similar downtrend structure that broke to the upside finally on Bitcoin dominance, right? To the same exact downtrend structure that we're tracking now. And so this is a pretty good breakout so far. And as the sell-off, continues to wane here, we get moments where Bitcoin seems to bottom, and then the altcoins do predictably get strong. So we had recently. And some altcoins bounce back versus Bitcoin, as Bitcoin looked like it wanted to put a bottom in. But as Bitcoin now rotates back down, I'm waiting for a much bigger move, maybe to the top of this trend line. I used to be watching for much higher levels, if you guys recall, waiting for a much bigger move on Bitcoin's breakout. But at this moment in time, what I'm looking at is to see, you see these trend lines I've got on here. We got to the midpoint, this mid trend line, and we got back above it. Looking to see if we don't make a move to the upside of this trend line. That would be a pretty broad capitulation in a lot of altcoins, which are already down pretty precipitously. So let's go take a look at maybe Cardano or Polkadot's one that's pretty far down. So what I'm waiting to see is if we don't get a capitulation move down, kind of very similar to what we had late summer. That appears to me to be the path that we're headed for. We're headed for, you see this structure here on DOT is very similar, right? I believe that we're probably headed for a capitulation move, and especially in altcoins. As Bitcoin makes its bottom, altcoins are going to make an even more severe bottom. That's my opinion. We don't know that that's going to happen, but that's what it appears like to me. And so I've been mentally preparing myself for a really strong capitulation sell-off, and I think this is a wise thing to be mentally prepared for this. Now, you see a lot of, I just saw a post out there earlier that says, oh, if we hit $30,000, it's not going to hold, it's going to go down lower. It's almost certain to happen this time. Like, nobody knows that. I would bet that the odds are that we actually hit these levels. If we were to hit these levels, that we bounce pretty hard out of here. That's my opinion. But yeah, this is fine. We need the gif of this is fine. But yeah, so that's the other thing I see kind of coming is a capitulation move in the altcoins, and I want people to be mentally prepared for that. If you're largely invested in altcoins, so I know I bought the dip on Solana, looking for a bounce, Cardano. I bought some Cardano for yield farming purposes. I'm mentally prepared for it to lose $1 and go to 40 cents, for example, right? That would be, a pretty severe capitulation move on Cardano. Now, the other thing that's very interesting is when we analyze this whole market structure, and again, I've been saying over and over and over again, everybody's expecting a 2018 style bear market where we kind of flatline here for a while and then have this big capitulation spike down before we move back up. And that's certainly a possibility. I don't see it as the probable outcome. I see this type of repeating this a smaller Wyckoff patterns and a larger Wyckoff pattern as the more actual likely outcome at this point. And the reason I say that is a couple of things. One, the fundamentals seem to be really pointing to we've got some serious support right through here. We had a lot of good buying volume as we came into sub $35,000, which is a monthly support level. So this whole area is just really strong support. And we're seeing a lot of buying activity. We're seeing the short side of the trade getting overly crowded, but I expect that to build up even more. I've been expecting the short side of the trade to get built up quite a bit before we break out to the upside of this pattern. But again, the fundamentals are actually very positive as far as we look at supply ratios and different behavior of different participants in the market, namely large accounts, whales accumulating here at the bottom again. And then we continue to see long-term holders continue to stack and stack aggressively. So there's a lot of indicators that tell me that we're probably going to come into a bottom around here. But if you think about max pain scenarios, right? You look at this, if this is a Wyckoff pattern, if this is, and especially if it's this pattern, you can see just the similarities here. But if this is a giant Wyckoff pattern, smaller Wyckoff patterns in a giant Wyckoff reaccumulation pattern, max pain scenario would be for us to put in a slightly lower low here than what we'd put in summertime, and then get our move back out of there. So we go back to this. You can see that that's what happens a lot of time in that secondary test in phase B. The market pushes just below, closer to the low point of that PSY move. So if we go back over here, you see this. The low point of this PSY move would be where I have this bottom white line at gray line at 28,000, which is right where the capitulation move came into before. On this chart, I think I have it labeled. Yeah. So this is the Coinbase feed. What I'm interested to look at here is you see the 2021 low print that we had a spike down on January 4th to 27,778. We never hit that level in the summer capitulation sell-off. We hit the monthly open price, I believe the yearly open price, but we never hit this wick low price of 27.7. So I'm kind of keeping an eye on. That's why I have that marked here as a 2021 low on my chart for a capitulation move in that ST phase B right into that level and then a bounce out of there. But I'm kind of teeing all this up because again I see a little bit more downside. But if you look at the grand scheme of things, we are clearly coming into what appears to be closer to the bottom of a move than the top of a move. So the other piece of this is I wouldn't be overreacting and trying to take advantage of too much of an advantage of selling here. If you hear me talking about all this and trying to buy back that 27,000, be prepared for it, whatever you need to do. But I would not be overly enthusiastic about trying to sell and take advantage of that little bit of a move, because we don't know exactly if we do come into that level, right? We can put in a higher low over here. That's certainly a possibility. We could break to the upside. Because again, I see the support here is building up quite a bit of support, and there are other patterns where you can see other examples of these Wyckoff patterns where the ST phase B actually stays above the secondary test. So we don't have to get below this wick low right here. Nothing says that we absolutely have to. It's just a possibility we can be on the lookout for. Hey, Lamb. So yeah, so in my trading style, I'm kind of getting back to basics. What's good about this sell-off is, I was hedging my bets and staying more invested. I know a lot of you were too. A lot of us were. Probably more heavily invested through this November, December sell-off than we normally would have been because of the prevalence of all the thoughts around, okay, well, it could be a huge move in December. And so I kind of hedged my bets to the upside and stayed more invested than I normally would have. And if you look at, the relationship of these moving averages, normally I would have been more aggressive at trimming way up here. And actually, I did say, we called it, if we lost this, on this breakout right here, if we lost this is where, I did advise some people to take some profit up here. But it was pretty clear, right? We were in a distribution pattern. And if we lost this high and swung down just like over here, then we were clearly putting in a distribution pattern where we had a false breakout and then an immediate rejection. And when we got that rejection, that was a place to lean into to trim way up here. The same is going to be true on the downside, right? So we could have a false breakdown, and then when you get that bounce play and you retake some support levels over here and this off of this trend line break, then you can look to play the other side of this move. But point being is, now that we don't have that, we don't have to worry about, okay, well, what if it's going to $400,000 next month or whatever, right? There's no more hedging. For me, I'm kind of relieved that I don't have to worry about hedging my bets anymore. I can simply trade the chart and trade what's in front of us, right, from this point forward. So I continue to see good support here, and I'm just patiently waiting, trimming, building up. Trimmed here, and trimmed here. Patiently waiting, trimming into this trend line, waiting for the right opportunity, the right breakout of this trend line to go back in full steam on a move to the upside. So for me, that's what I'm waiting on, trying to be patiently waiting on that move. But I think it's coming. I think we're going to have a really strong bounce to the upside. I would not at all be shocked to see us go back up all the way to the range highs, right? You better believe that by the time we make it up there, we'll have already probably taken profit at the midpoint. I already planned to kind of do an account reset, more at the 200-day moving average myself. So if you see here, if we were to bounce here, if we weren't to go any lower, the 0.5 level of the bounce is right around 51,000, and you've got the 200-day moving average here at about 49,000. In this range, I'll be doing an account reset and getting largely back over to USD, and then if we break to the upside of this, then I'll be back in for the move to the top side of this range. But that's kind of my general plan right now. We have a long way to go, though, to get back to just even the 200-day moving average at this point. That is $48,000. But again, with the prevalence of the OI, the open interest stacked to the short side, I definitely see a really strong potential for a pretty severe short squeeze once we break this downtrend. Hey, Jay Carey, Michelle, what's going on, everybody? Good vibes. Hey, guys. So, those are my thoughts there on that. Another thing that what I want to get back to is watching some of our the altcoins that we've been wanting. I've been researching some altcoins, looking for good opportunities. The problem is it's just not a good time to buy. When I look at the Bitcoin dominance, is the big reason I'm not talking about altcoins a lot just yet. Although I'm researching some altcoins that I want to accumulate on a capitulation move. I'm waiting for the capitulation move to start talking about them. Because if I start talking about them now, what I'm afraid of is people are going to start, kind of FOMOing in, YOLO buying these altcoins that are really some really good potential. Take a sip of coffee here. But I'm afraid people are going to just then sell and capitulate and not be as excited about them when they actually hit a real bottom, right? So I want to talk about these. I'm going to wait to what I think is closer to a capitulation bottom and start talking about some of these altcoins. For now, we're just watching the market and broad markets as well. Let's go flip over to the broad markets here. Let's look at so DXY has been coming off, I've been noticing, but we're still above. If you look at my chart, I'm going to zoom out on the weekly here. I've got this longer term uptrend that we were watching for a really long time. We obviously broke the downside of it, retook it back to the upside. We're very much at a decision point. I kind of see this right around 95 level as a key swing level of the chart. When it breaks one way or the other, it tends to want to make a nice move. But we're back to that midpoint of the DXY chart here. So this is a bit of a decision area. Now, of course, the dollar is measured against a basket of other fiat currencies. So this hardly tells the whole picture. This really just tells me general sentiment of the market, and it's kind of indecisive right now. Looking at the 10-year yields, 10-year yields continue to tick up. So investors are not terribly excited about bonds, right? So they're wanting to be in more speculative assets. Bonds don't sound very attractive, thus the interest rate is increasing to try to entice more buyers. Looking at the NASDAQ chart here, I haven't looked at this one today, but if you look at it from a weekly standpoint, right, this is a pretty bad breakdown. My expectation still remains that we actually kind of crab sideways for a while. That's my general expectation. I don't see, given the situation with the Fed not being unable to take action so far to try to cool the markets, until they meaningfully raise interest rates, and even a 0.5 raise, the markets can still thrive. We were looking at it the other day, right? The markets can do great under 1-2% central bank interest rates. So I think a small interest rate. The bigger thing is QE. If QE ends entirely, right? If they actually taper all the way down to zero, which tapering of QE just means slowing asset purchases, doesn't mean ending them. And if they ever enter a quantitative tightening environment, then that would be a very different environment, and that would make me very different about my opinion about things. But in my opinion, there's just too much money. I'm just look at this M2SL. This is not just the Federal Reserve, right? This is all banks. This is the action that banks are taking by fractional reserve lending, taking deposits and lending them out multiple times. This is what the result of that fractional reserve system and the central bank also creating money out of thin air to buy government bonds. But this, or to buy other assets, this is reflective of the entire money supply, right? So this is both the Federal Reserve's actions as well as banks taking deposits, lending them out multiple times, fractional reserve banking, right? And so we've seen just an absolute explosion. Since really 2008, we saw a pretty big increase. It was, obviously the money supply has been expanding, but that's okay. Money supply expansion is normal given economic expansion. As the economy expands, you need more money, right? So that's a normal increase in money supply as we saw here in the 80s and 90s, this is normal. But when we get to these environments where the money printer kicked in really, over time in 2008, and ever since then, it's just been a ramp of epic proportions. So I look at this and just think there's just too much money out there in the system floating around until they get this under control. Low interest rates are gonna cause, it's much easier to lend right now, to borrow money right now, with that low interest rate environment. And so until that gets reined in, where's everybody going to go with money? And so that's my problem with looking for a lot of downside. Now this chart looks pretty gnarly with this ascending wedge, but you look at the macro situation. Where else is money going to go? And so all I see on this chart, really, when I look at it, is I see support here, all through here. My magnet tool is going to cause me to fits. So I see a lot of support here in this consolidation that we had before when we broke through this area. So this whole kind of area is just general support. So I think this is probably, in my opinion, on equities, this is the bottom of like the tech move, most likely, and then we'll crab sideways here for a while the market figures some things out. The Fed is tapering. There is some slowing of asset purchases, and they will raise interest rates eventually, right? So that is going to put some pressure on these markets, but there's still just too much money, and until the Fed actually takes more severe action, there's just nowhere for money to go. So between equities markets, you look at the S&P 500, again, I see that we broke down, in my view, we broke down of a bit of a ascending wedge here, and we're into resistance now. That's what I kind of see. But the broad markets obviously have a lot to do with what Bitcoin and crypto are going to do as well. It's a matter of risk on, risk off. Are we in a risk on environment, which means crypto and other risky assets can do well, or are we risk off? And the one thing we're waiting for is the narrative of Bitcoin as a risk off asset to really take effect, which it's starting to. You can definitely see some institutions talking about this. I want to point out this Fidelity, with that in mind, this Fidelity article here. Now, Fidelity Digital Assets came out and said, this is, Bitcoin, they consider Bitcoin completely separate from other cryptocurrencies. And so at some point in time, this sentiment around Bitcoin as a risk-off asset potentially will put a floor under Bitcoin. Now, being a risk-off asset may not give it insane upside unless things really fall apart, but it'll put a floor under it, right? But what Bitcoin has been seen as a risk-on asset, right? So when markets are feeling good about speculating, Bitcoin and especially other cryptocurrencies, I personally see this breaking over time to where the rest of the crypto market is seen as risk-on, and Bitcoin is seen as the risk-off asset. And so you can see with big investment firms like this putting this type of thing out there, they see pretty much the same thing. That Bitcoin is fundamentally different from other. I'm just going to read this one statement, this one bullet. From digital assets, no other digital asset is likely to improve upon Bitcoin as a monetary good because Bitcoin is the most, relative to other digital assets, secure, decentralized, sound digital money, and any improvement will necessarily face trade-offs. So, quote-unquote improvement, right? So, the smart contract platforms, Ethereum, Cardano, Elrond, Avalanche, these platforms are really interesting. They can do some really interesting things, but they're not in the same class as a digital asset as Bitcoin is, in my opinion, and in the opinion of Fidelity here. So the other kind of, as we analyze this market, we look at this market, the other real major theme I'm waiting to see play out is to see Bitcoin either get bid or have limited downside in a risk-off environment, right? When we finally see that, right now, the market's moving risk-off and Bitcoin's selling off with a risk-off move in general. There will come a day, likely, when Bitcoin actually reverses and it is an asset to purchase in a risk-off environment. But you look at here, the other risk-off assets, gold namely, it's done a whole lot of nothing. So I think the other part of this is the market doesn't know where to go, right? So normally given everything that's happened in the last couple of years, we'd be in a pretty risk-off environment given weak earnings. I guess Facebook is down massively. Just look at Facebook, right? Meta, way off, huge sell-off in Facebook on not even that bad of earnings. I briefly looked at it; it did not seem that bad, but it was just slightly under expectation, and it just gets sold off massively here. But so we have this sort of risk-off nature in the markets, but our gold, silver, metals, things that are typically seen as kind of risk-off safe havens really aren't getting that much of a bid. Neither is the dollar. For that part, the dollar is also in this indecision range. So I think the market in general is just very indecisive about what the heck's going to happen. Let's look at comments. Can you make a case for the bullish cycle? I can certainly make a case that we are still in a very bullish environment for Bitcoin. Absolutely. I see it all over the fundamentals. So I posted a lot about, I post, let me go find my Twitter post here. I posted a few charts, I think. I might have posted them just in our, okay, this is Nick. Here we go. So same thing. Yeah, I did trim a little coming to resistance over there, so on and so on. Okay, so here's a couple of major items that I'm watching for the bullish case for Bitcoin, right? So the funding rate has been negative for a while, just like it was in the summer. I expect a very similar environment where we're negative for a couple of weeks. Get a lot of build up to the short side. Get the short side of the trade, very stacked. Get that. Once the short side of the trade is very clearly the crowded side of the trade, then you'll probably get a wipeout of that short interest. You can see the exchange reserve. We've had a move up in the exchange reserve recently, so there was actually a pretty big influx of coins onto exchanges. The other kind of reason that I was more aggressive about trimming as we came into resistance over here is that I saw that big influx of coins onto exchange, and it kind of tipped us off that we were probably going to sell off coming into resistance over here. Now, it wasn't just this. I have just a trend line on this chart, but clearly this is the area, the horizontal area I was watching more is this area right here. All right, about 38.2. But so as we came into that, between that resistance area and the trend line, we did see a lot of coins come onto exchange right through here, which again tipped us off that we're probably going to sell off. So this I posted back on the 29th when it still showed a precipitous decline. Right after I posted this, there was a couple of days of it coming back online. But nonetheless, the exchange reserve and the liquid supply ratios continue to remain and continue to be bullish long term. And what was interesting to me is the open interest, right? So we haven't had an open interest. So we had an open interest wipeout as we took out the long side of the trade a couple of times now. But if you look at open interest in general, there's still more open interest. So that means there's more futures contracts than there was in the summertime. If you look at the big summer sell-off in May, right, we're well above. You can almost draw like a trend line through, from May through to the September bottom and find, probably right about where we're at. But the open interest is still elevated. And that tells me that that's probably, again, largely short side. But net, I'm trying to find that was a really good chart to kind of represent this. I was looking at some long-term hodl behavior. Let's go to my Discord here. I posted yesterday. Let's see if I can find this Discord post. I posted a chart yesterday, just some general long-term stuff. Let me go find it. Hold on. Here we go. That's my chart. I guess it was Lemmy and I were pinging back and forth about something, and I posted. They were asking about, I think Lemmy and Quinn in our Discord group were asking about, how do you know, network growth. So I was saying, look, we continue to see network growth, and I contend that we're going to, here's the chart right here. Let me see if I can't copy image. I'll paste that. I don't know if I can do this. Here, I'm just going to put that on the screen here. This is from our Discord server. So if you look at the growth of the network, this is just a really key raw metric. So another thing you'll notice I've done as I quit looking at all these MVRV scores or R-HODL ratios. All those things are derivatives of the raw data. It means that somebody took the raw data, they calculated some things, and they put some pseudo-subjective analysis around that, right? I want to look at just the raw data, and that's what I focus on. I don't really focus on the derivatives of the data. I look at the raw data itself. So this is another example of just raw data. This is the number of Bitcoin addresses with a non-zero balance. It means that they're wallets that have some Bitcoin in them. And this really just shows network growth, right? I contend that we're moving away from a boom-bust cycle rooted around the halving and the supply shock that the halving creates. And we're moving into a more mature market where we have waves of investment interest that follows, on a central point of adoption. So if you have a normalized value based on adoption, we're going to swing around that to the upside and to the downside as we get overheated and euphoric, and then on the capitulation on the downside. But I think we're going to, just like most markets, swing back and forth across a value that's anchored more in adoption. So this is just a raw metric that shows, number of addresses with non-zero balance still is up and to the right. another oh boy, I'm gonna get Discord off my screen here. Another kind of raw metric is the Lightning Network, just the Lightning Network in general. All the Lightning Network metrics are up and to the right. Let me see if I can't find where I posted that in Discord here. I took a screenshot of multiple charts, and here it is. Got it. All right. So I'm trying to make this a little bit bigger so y'all can see. Everything's black, so I can't see what the heck I'm doing. I don't know if y'all can see that fairly well or not, but so this is the Lightning Network. So you see Lightning Network capacity up and to the right. Lightning Network channel mean size up to the right for the most part, kind of flatlined here recently. Channel size medium. The number of channels, number of nodes. All these metrics are up and to the right. Now you look at, where is adoption coming from? Why are the number of non-zero addresses increasing? Well, it's adoption from places that need Bitcoin, like El Salvador or Venezuela or Turkey, right? And so those places are using Bitcoin. They're trying to use it as a real day-to-day currency, and for that you need the Lightning Network. So this is why both non-zero addresses are increasing, because you have just a lot more users coming on board from those areas. But then the Lightning Network is what they use for their transactions. So Lightning Network up and to the right, and all these user metrics are just up and to the right. Lamb says it's highly unlikely for us to get another pi cycle top. Sorry about the coughing, guys. Still getting over this stupid stuff in my chest from COVID. All right. Let's see here. Michael says the pi cycle predicted the bear market last cycle, albeit after the fact. So here's what's interesting, right? We had a pi cycle cross, and then within a few months of the pi cycle cross was right over here. Within a few months of that, we had a new all-time high. So it's a pretty poor predictor if you put in a pi cycle cross and then a few months later you're putting in a higher high, right? So the pi cycle did very accurately kind of nail this top right here. So good on it. But this is an outlier. So this is an example, and quite a clear example of how the market is now changing, right? Everybody's expecting this boom bust cycle where you have a pi cycle cross and then there's this mega multi-year bear market. Well, the problem is the bear market should have started right here, and then we put another high. That's another indicator that the market behavior is very much changing. So Lamb thinks that it's mathematically unlikely to get another pi cycle cross. Lamb, here's the one thing to consider: these moving averages, it might be a matter of a derivative of time, and so that the higher moving average, there might be simply less of a gap to close. Let's go look in Bitcoin, and let's go find that pi cycle. I'm going to show you what I'm talking about. My goodness, I'm just like coughing like crazy over here. Sorry, guys. Let's go look at the pi cycle. Find the pi cycle top. Somewhere in here they have the pi cycle. Lower hodl. I thought so anyway. There we go. All right. So you see in other market cycles, you have this. The cross happens when you it's a weighted 2x 350-day moving average and a 111-day moving average. If you look here now, you look back. I'm just looking over here, right? So we had the pi cycle top when you had this huge parabolic move, but look how close it got to crossing here. If you just had a little bit more price action on this side, what you're gonna do? Well, let me back up. What I think is going to happen is that these moving averages are going to become much closer together as the market matures, and as price volatility slows down and it's more of a consistent ramp to the upside. These moving averages are actually going to be very close to each other, and it's going to take a much smaller relative move in price than this very large, sweeping parabolic move to get this pi cycle cross here, and then a very pronounced move here that got us this pi cycle, crossed over here. In the future, if we were to get pi cycle crosses, you're probably right, because we're not going to have this massive ramp from a low to a high like this. It might simply be that the two moving averages are a lot closer to each other because price has been compressed and going sideways for a period of time, and you get the cross on a much smaller relative move, if that makes sense. So I still think we can get a pi cycle cross without these crazy blow off tops. Just a strong relative move. If the two moving averages are really close to each other, a small relative move can cause them to cross. As long as that small relative move happens in a short period of time. Man, guys, this is a rough session today. I can't even talk. I keep getting all congested. All right, so also it got really cold here last night. So, us Texans aren't used to this cold weather. I think it went from 70 degrees late yesterday to 30 this morning. So I'm definitely not used to this. Is there any concern that the Fibonacci as measured from the last cycle top hit 4236 and formed a double top? So the double top. Okay. Yes. There is some concern there. I would say the possibility exists. Here's the other thing that we have to recognize. The possibility exists that because of other external factors, say the green movement and the attack on proof of work mining, that this was a very long-term or even a permanent top, right? There is a chance this is the top that Bitcoin will ever see, right? There's a not greater than 0% chance. Not my opinion, not what I think, but there's a chance that this was the absolute top in this speculative asset, and we are now heading down from here. There's a lot of things that would indicate to me that that's not the case. But as time goes on, if we were to say, for example, get a bounce over here, and as we make this move up, the on-chain data that we watch gets very sour. Lots of coins coming on exchange. Things just don't look good at all. A lot of these metrics that we watch just really get very sour very fast, and we roll over, make a lower high, and roll over. We could be in for a longer period of downturn. So there is that risk. I won't say that it doesn't exist, and it's greater than 0%. This is the case. I think it's probably more likely that we are in a long-term range, right? And you look at a lot of the metrics. Again, I see lots of indications that we're coming into a bottom. But I also am starting to see more and more indications that we need another capitulation sell-off, right? And the main reason is the altcoin market and the Bitcoin dominance. But again, the market is very clearly, in my book, changing. The behavior of just the whole market in general is changing. How the market behaves. Hold on a second. I keep having to mute. Okay. And so that is something to be aware of and be conscious of. Again, going back to this Wyckoff pattern, I do think it's probably more likely that we move to the top of the range again, and and then we consolidate, very painfully consolidate maybe for another year or so, and then move back out of the range. What could take us from the bottom of this to the top of this move? A spot ETF approval is probably coming sometime this year. I would think that a spot ETF would take us out of the range. So, that might be the driver that takes us out to the next, markup phase. It could also be front running the next halving. So I guess I could see a situation where we sell off so severely that we're down here at 27,000 and a spot Bitcoin ETF takes us to maybe another marginally higher high at 72,000, and we do very much a mirror of this pattern on a longer time frame, right? That's another possibility. And then the spot ETF, as that news wanes, get another sell-off. But again, looking at this pattern, a spot ETF would give us a lot of real-world adoption. And you can see how, so from the bottom of this range, the spot ETF could take us to the top. We simply consolidate as institutions work on accumulating. And then what takes us out of the range is the next front-running the next halving, or even the next halving itself, right? So this might just consolidate all the way through till the halving. I would think the market, I continue to think the market is going to front-run the next halving, actually. And then the halving will be more of a sell the news event. It's because it's so widely talked about. Thanks, Andy. I appreciate you. I'm struggling to get through this today, man. My voice is not doing well, not holding up very well. But so those that's another thing I'm just looking at more of a long term. I do think we're more in a range bound market. I think this is, if you think about it, right? If there ever was going to be a super cycle, let's go to this long term chart. Let's just kind of think through this. If there is going to be a super cycle is literally, what most people mean when they talk about a super cycle is basically exactly that: a transition away from a boom bust cycle into one very large, very large move to the upside, a very long sustained move to the upside, more rooted in adoption. Right, so the super cycle narrative is that we're going to have this hyper Bitcoinization, right? This hyper adoption. Well, the early phases of a super cycle, I would suspect, would look exactly like what we're talking about. It's a transition away from this boom bust cycle that we've been seeing. Having boom, and then you hit a euphoric peak and a bust, capitulation, another halving, boom. Moving away from that into a market that looks more like a sustained long-term uptrend. And in my opinion, what I see going on is we are consolidating in this range-bound market while we make that transition, while the market adjusts to the new kind of reality that this market is going to be now more rooted on. Why does it always curl like that at the beginning of these lines? More rooted on adoption metrics than it is on supply metrics, namely the halving. And you look at the halving too. Again, the halving continues to be, less and less. In theory, it should be less and less impactful. But I do think if you look at, 2024 is when the next halving should be, somewhere over here. This has been so talked about and now so well understood. I imagine we're actually going to front run this halving. So I think the next big catalyst is a spot Bitcoin ETF. So if we get a spot Bitcoin ETF, and get rid of that because our channel's dead. That'll take us back to the top of the range, maybe a marginally higher high. I would think higher than that, but we'll see what happens. We could just move back to the top of the range without a spot ETF. It could just be a matter of market cyclicality that moves us to the top of the range, and then the spot ETF takes us out. But I do think this next halving is going to get front run. So I do think we're going to see a big move up and then a bigger sell off. You saw the market starting to try to price that in. Michael brought that up when he was live with me, or we did a session before. He thought this big move in 2019 was exactly that, but maybe the market was trying to too aggressively front run it. You can see here the market kind of front run the 2016 halving a little bit, and then a little bit of a sell a news event. I think you're going to see in a very exaggerated version of this when the time comes. A much bigger move and a much bigger sell-off after the halving. That's kind of what I think is going to happen. But yeah, so ultimately, that's just what I see happening. I see just a range-bound market as we transition from what people understood, and all this now that everybody's been fully wrecked, everybody who's looking for a parabolic top and everything else has been pretty fully kind of wrecked by now. So the market is doing its job and being unpredictable, right? So it's... All right, I'm going to take one more comment here. Oh, hey. Michael's here. He's probably a little bit behind, saying he agrees, given the monetary policy, it's a lot of money on the sidelines. And while continue to stay on the sidelines until monetary policy changes. Yeah, so no problem, Michael. So I got one question here. I keep hearing it's best to cut ties with your losses because we're only going further down with losses. What do you think? Would it be smarter to transfer funds into USDC while the market is down? That's for everybody to decide for themselves, right? There is a very sage advice in trading and investing to cut your losers and add to your winners, right? The one thing to be very careful of is thinking of and calling Bitcoin a loser. It is literally the best performing asset in human history. It's a volatile asset. So selling off from $70,000 to $36,000 sounds scary, but this asset was literally pennies just years ago, right? So I think the bigger thing is to understand that if you're invested in this market, if you have a long-term time horizon and time preference, this is literally the best performing asset in all of human history. And at this point in time, we haven't really broken any significant paradigms other than we haven't had the upside in this this kind of quote-unquote cycle that we've had in prior quote-unquote cycles. But I also believe we're not going to have the same downside. I think when it's all said and done, you're going to see that we're going to put in a bottom closer to these lines I have over here in the high 20s, low 30s, somewhere in that range. We might have already put the bottom in. We don't have to have another capitulation spike down. That spike down may happen in the altcoins, whereas Bitcoin may hold up. I don't know. But point is, this is a very volatile asset, and at this point in time, you're getting to the bottom of a trading range. So I wouldn't overreact, but it is true to cut your losses. So if you are somebody who bought in up top up here, you really have to evaluate what was the mindset. Why did you buy in up there? That's probably the healthier thing to do than to sell at the bottom of a range, because we're clearly in a trading range right now, right? And if nothing else, give it until you see the trading range break. When we see the trading range break, when we see it break to the downside, we're going to know it. We'll be talking all about it. Like, okay, we've broken to the downside of this trading range, and everything is very different, right? If we break to the bottom of this, then you're looking for much lower prices, right? And so you should probably protect yourself on the way down here, as I've been doing, but don't overdo it. Don't overreact, I would say. That's my honest opinion, right? So again, we trimmed, on this false breakout. Get rid of this stupid magnet tool. It's messing me up. Trimmed here, trim coming into this. You can, at this point, it's getting to be a little dicey. The downtrend's been so severe that if we make another move down, come back into the trend line, you can try to trim again, thinking you might get some more downside. But at some point, that's not going to be the right strategy just because you've been in such a severe downtrend. But I would think, just stop and just analyze and say, okay, this is the greatest performing asset in human history. Like I said, just a few years ago, it was $100. And now it's $36,800, right? So, the saying "cut your losers and add to your winners." On the grand time scale here, if you've been smartly DCAing into this, this is a massive winner for you, right? And so the smart thing to do is to continue to DCA when price is weak on an asset that's such a big winner as this one is. But at that longer time preference and that more kind of broad view of it is what you're going to have. On a very short time frame, if you bought in at the top, you need to analyze why you're chasing price and why you're FOMOing in, because that's the problem. The problem is not that you bought the best performing asset in all of human history, all right? The problem is you bought the best performing asset in all of human history after a very strong move to the upside chasing price. And so anybody who bought here or here, if you bought in there or there, the problem is not Bitcoin. And the problem is not that you need to cut your losses. The problem is you need to quit buying into chasing price, right? That's the problem. So I would say, again, if this is a loser for you, that means you bought at the wrong time. So you need to stop, think about what caused you to chase price like that, reorientate yourself, and understand that you have to have either a longer time preference or you need to learn some trading methodologies. If you're trying to be an intraday scalper, go follow Heath and his channel and learn how to analyze price intraday and look for smart levels to buy and sell into. But if you're trying to be more of an investor, long-term mindset, really, again, the best performing asset in human history, you just bought in closer to a top. The smart thing to do is to DCA in at the bottom, right? And to be patient with it rather than trying to capitulate at the bottom of a big downtrend, right? This downtrend is going to break. It is going to move to the upside. It's just a matter of how much. It's just a matter of how much of a move we get, right? If it's a very weak move, right, out of here, I would say the other thing to do too is if you bought at the top, you really, I would, not financial advice, I would absolutely wait for this bounce out of here. But if this bounce out of here is very weak and we come in to say this level and then roll over again, that's bad news bears. This is the point you want to look to trim at this point. If you were one that bought it up here, sorry guys, you're looking for the best opportunity to exit and you want to wait for this downtrend to break and see where that takes you. And this is where you're going to have to, this is now the time for you to learn. When you see, you're going to have to learn these resistance levels, right? And look at these resistance levels and see what price does and fundamentals do as you come into these resistance levels. There's going to be a lot of key indicators. There's going to be a lot of coins coming on exchange. Funding is going to flip highly positive. We're going to have, very high funding rates, whatever, potentially, if we're going to roll over at one of these areas, right? So these are the main areas I'd be looking at. So say price gets right into here. If coins are piling onto exchange, people are sending lots and lots of the corn onto the exchanges, and funding is like 0.03% crazy high funding rates, and people are just YOLO long. The sentiment has gone back to greed, 90% greed. There's a bunch of indicators to look at, and you see price struggling to make a high here, just butting up against it and starting to roll over. These are all your indicators. This is your opportunity here to go ahead and to cut your losses short and look to buy back lower. But you can't, if you're one of the people that bought in up here, it's really, you're doing the exact opposite of what you need to do. You need to stop and think about it. Stop and think about, again, why did you buy here, and why are you worried? Why are you thinking about capitulating down here? Yeah, cut your losses. But if you take that advice, if you're chasing price and then cutting your losses, all you're going to be doing is just losing all of your money really fast in the markets, right? So you got to quit chasing price, first of all. And then you got to smartly cut your losses when it's actually a losing trade, right? For most people that have been involved in this for a while, this is one of the biggest winners in their portfolio. I know for me, Bitcoin and crypto is by far the biggest wins in investing I've ever had. So even off as much as this is, like, I'm still up over 10x in like a couple of years, right? And as painful as it was going from up, my whole account was up 30x over here. Now I'm up like 18x over here. Yeah, that's painful, but this is not a loser, right? This little bit of a move down, I lost some value on that, but in the grand scheme of things, this is not a loser I want to cut. Right, this is a winner I want to add to. So hopefully that little bit of perspective kind of helps answer that. Okay, so yeah, good. I'm glad you didn't buy above 43. Good. So in your case, we were sitting pretty good here, and a lot of people have been with us a long time. But I have to be cognizant of the fact that there are new people joining us all the time that are getting really, really excited up here. And if you're on this live stream today, the numbers are way down. There's a lot less people watching live streams now and a lot less interaction on Twitter and stuff like that because the interest in crypto has waned because of this sell-off, right? I get it. I don't blame people. But if you're here watching, listening, studying with all of us, you're in a really good position moving forward, right? Even if we get another year or two of weakness and we end up, this is a bear market, and I'm wrong, a lot of us are wrong who are saying that, hey guys, the fundamentals say that we probably are putting in a bottom here. Well, I mean, everybody knows, every trader and their dog knows that we're going to get a break up to the upside over here and hit some resistance, whether it's 50s, whether it's 72,000, whether we make a new, run on a new all-time high and then get rejected. We make it to the 50s, make it to the 40s. Everybody knows this pattern is going to break to the upside at some point. We're going to get a relief rally. It's just a matter of where does it go and what do the fundamentals do, right? But after that, if we run into severe resistance and it's a really weak bounce and we're hit $40,000 and all the fundamentals just going to crap, greed is through the roof and everybody's getting euphoric, YOLO long, funding rates are going bananas, then we know that we're in for a lot more pain right at that point. And then and we can all position ourselves accordingly and be well protected to buy the dip further down over here. But this is a exponentially growth market, and everybody who's here with us right now, when the chips are down, if you're here on this live stream and you're studying, you're active with us on Discord, you're active on Twitter, you're learning, you're going to be in the best position possible to take advantage of whatever happens next. End of story, right? None of us know what's going to happen tomorrow, but we can all better ourselves and be in a better position to take advantage of whatever happens tomorrow. So that's the main thing. Again, let's have a calm, rational outlook. We all know what's going to happen. Everybody and their dog knows that this downtrend pattern, severe sell-off, is going to break to the upside at some point. It is going to find a bottom. It's going to break out of this pattern. We're going to be on it like white on rice, looking at everything that happens on this breakout. And as soon as the fundamentals and all the other metrics that give us a heads up that things are getting overheated, as soon as those things happen, we'll be well positioned to protect ourselves and be able to buy the dip, on a more severe downside if we were to curl over and get more severe downside. But to your point, I do think the altcoins are where we want to be very cautious right now. Very, very cautious. I would not be overexposed in altcoins. That's the other main takeaway from the day is if you're heavily invested in altcoins, go look at the Bitcoin dominance here. Given this. The likelihood at this point, after being rejected at this trend line one more time, the likelihood that we find ourselves all the way down to the bottom of this trading range for the ST phase B, the secondary test in phase B on a larger Wyckoff pattern is growing much higher. If Bitcoin were to sell off and lose this low at right around 33,000, you'd better believe altcoins are going to get absolutely murdered as it comes into this capitulation low over here. If this were to happen, I don't know what's going to happen, but it's a possibility. And this is a relatively small move on Bitcoin, right? I guarantee you from here, guaranteed. That's a 20% sell off from here. That's bad enough in Bitcoin. You're going to have altcoins that are off 50% from this point or more, and they're already down a lot. That 20% sell off in Bitcoin is going to slam some altcoins for another 50%. I don't know which ones. Some are going to hold up better than others. But, I'm going to look at my favorite, right? My favorite altcoin is Cardano, okay? Let's see where we're at today. If we were to get if we get a breakdown of Bitcoin, you're going to lose $1 on there you go right there. You're going to lose this dollar support on Cardano. That capitulation move takes us all the way potentially to 40 cents. Because you see, I guess in theory, we could find some support right on 80 cents over here. But I mean, it was just February that we sold off. This is the Kraken feed. Remember the Kraken wick down 15 cents on Cardano? Now, this will probably be a very fast capitulation move and probably a pretty fast bounce. So keep that in mind. But just looking at my favorite altcoin, like I'm mentally prepared right now for Cardano to go to 40 cents. And why am I mentally prepared for that? Like, I think Cardano's crap? No. It's literally my favorite project outside of Bitcoin. But I look at, Cardano was just 10 cents 2 years ago, right? 10 cents 2 years ago, and it's been, it got up to $3. It's been holding $1 for a long time. Selling off from $1 to 40 cents and then bouncing after it was just 10 cents. If you look at it from that perspective, very long term, right? That's if we were to lose $1 and go all the way to 40 cents, that's still a 277% gain from 10 cents to 40 cents. So you got to think about it from that perspective. Let's look at Matic. Matic's another one, right? Matic's bananas. I need a longer term Matic chart. Let's go to Binance. All right. So, oh wow, look, I was doing a lot of charting on Matic a long time ago. So this is when we were trading Matic actively, apparently. I haven't looked at this chart since then. All right, Matic was 2 cents. When I very first started talking about it, I know it was 2 cents. I bought a small bag of it. I really, hindsight, I would have gone all in had I known what was going to happen, but whatever. 2 cents on Matic. This thing, in a matter of months, went 13,000. It was 100x in a few months. And it topped out at 14,000% gain, right? So just be well aware that while this is a great project, that is some insane moves to the upside. Absolutely insane. This is where I see the biggest potential for some rotation to the downside. You see this trend line I'm going to put in right here? All right, this is just our general uptrend for this whole broad market, and then boom, we've lost it. Where's the solid support on Matic? It's down here, 20 to 40 cents, just like we look at Cardano. I love Matic too. I love the project, Loopring, Matic, scaling solutions on Ethereum. These are some of my favorite projects. I would be mentally prepared for a capitulation low of 40 to 45 to 28 cents on Matic. That is a huge sell-off. That is monstrous, and it could happen. And while Bitcoin's only down 20%, this thing can be off. There you go, 60, 70%. That would, the Bitcoin dominance chart is put in almost a triple bottom here. It really looks like it wants to bounce to me. So this is where I would be really, really, cautious if I'm invested in altcoins. It's because if we lose this level, we come to these bottom levels, a 20% sell-off in Bitcoin is going to mean a lot of these altcoins, even good ones, are going to lose some major support areas, and it's going to be ugly, right? So that'd be the caution. And I'm over here talking about being, using logic and not being too fearful about things, but this is the logical thing to do, right? Is to realize we're up thousands of percent in these assets in a short period of time, right? So Cardano, for example, from this low here, November 2020, 3,200%, right? There's room for downside. Now, given that it was just $3 a while ago, it can make it back up there pretty quick, but I wouldn't expect it to sustain that either. But yeah, this is, again, we lose. You look at these major altcoin charts, you see they're coming into these areas where they want to lose this support. If they do, it's going off 60%. So that'd be my other kind of caution is, when you talk about adding to winners and cutting losers, again, the problem with Cardano and Matic is not they're doing fantastic. They're up and to the right. If you're a long-term investor, these are some of your biggest winners. Literally, these are two of my biggest winners ever in all of investing are Cardano and Matic and Ethereum itself and a few others, right? But they can come off a lot and then regain footing and resume to the upside. So it's just a matter of perspective. If you are calmly and rationally prepared to buy these capitulation events, and you're having more of a long-term view, these can become some of your biggest winners. But if you're one of the ones that bought up here, you got to ask yourself, why were you chasing price like that, right? Why were you chasing price? And why were you buying something that was already up? Say you thought you bought the dip on Cardano over here. That thing was up 1,900% in a year, and you're trying to quote unquote buy the dip. You got to stop and analyze why were you doing that, right? Now, if you're an intraday scalper, that's a totally different story, right? So obviously you can go look at this chart, right? If I'm just I'm just scalping intraday, I can say, okay, you probably actually should be shorting this. This is what good intraday scalpers. I'm looking at this chart right now going, yeah. You can see this level right here. This has been a great short, right? I'm just going to lay this one out. Super simple. All right, breakdown, trade in the range, come back up, short right there, boom. That's intraday scalping, and then your take profits this level right here, right? Okay, great. So I guess intraday traders are probably actually shorting this thing. But nonetheless, I don't know. I got way off track here. Point being, now's the time to just, if you're, the place I would be more ready to take profits is on altcoins, or to be ready to cut your losses. You can see right here, for example, I'm just going to throw this on here. Cardano. If you're big into Cardano, if you bought below, like for me, I'm just going to hold what I have, right? So I just sold a bunch into these big spikes, and I bought a little bit back over here for some yield farming when I thought it might be reversing. I'm just going to keep that. I'm just keep yield farming. But if I was overly invested in it and I was worried about what was going to happen, you better believe I'm going to have a stop loss right below that level right there. See that wick low? You take that out again, the market's rotating down, right? If you take that out again, odds are it's not a certainty, right? It could be a swing pattern failure or something, but odds are you've lost momentum and you're very likely headed for a nuke scenario. So, for me personally, I'd be, these are the type of assets I'd be looking to trim to be protected. Bitcoin, again, we might maybe have 20% downside from here. So, you act accordingly on that. Yeah, I guess the downside from here is like 25%. It's more than I thought, more than I was thinking. But I hope that helps everybody. But yeah, as far as Bitcoin goes, this long term, again, I think the main takeaway for me is that while we have a potential 25% downside from here, the smart play is to wait for the break of this downtrend and then to see what happens and to map out resistance levels and see what happens on the break of this. I would be patient. Even looking at this 20% potential down, you find a level that that you probably we're going to, if we lose, we go down a little bit more and maybe take advantage of that. But the other thing is that from here, I would say the immediate upsides would be about 100% upside, right? So if we get a spot ETF approval, everybody knows what's going to happen when you get that spot ETF approval. You're going to break this downtrend, you're going to eviscerate some shorts, and you're going to move and probably make at least another marginally higher high and put in, a reflective pattern, a larger scale pattern. This is 1, 2, 3, 1, 2, 3, right? It doesn't have to look exactly like this, but we all know what's going to happen. So the upside is probably the 70s in the immediate future, and the downside is the $10,000 more off from here, I would say. Now, worst case scenario, we break down. Let's not worry about worst case scenario today. Let's just look at this. You see this pattern? There's a lot of support down here. We know we're probably going to get a bounce out of here. That's what I would be more focused on. But I'd be patient and wait for it to clearly break to the upside before we make any too aggressive moves. Right? That's the other kind of takeaway for me. That's what that's the main thing. Even if we come into these levels, I'm not going to buy coming in. I'm not going to just blindly buy these supports down here. It's catching a falling knife. I don't know for a fact that we stop right here at 27,000 something. Right? I don't know. All I know is that when I break to the upside of this, that's going to give me the best opportunity to try to ride the what's the word I'm looking for? The short squeeze, the recovery. I'm losing it, guys. The recovery rally. What do you call that? Somebody in chat, help me out here. The wave, I guess. Yeah, not the wave. The relief rally. My goodness. Okay, all right. Time for me to wrap up. I can't even remember the word relief rally. All right. Well, thank you, everybody. I've gone a little bit long today, but I hope that's what I'm seeing in the markets. This is what I'm focused on right now. Is Bitcoin dominance, these key fundamental metrics. I'm seeing signs that we may be, especially in the altcoin market, wanting to put in another capitulation move down. I would be positioned to protect yourself, especially in the altcoin markets, if we were to make another rotation down. But at this point, we're really close, probably to the bottom of this impulse down on Bitcoin, given all the fundamentals. So the next opportunity is just to wait patiently and wait for the break to the upside of this to really make the next move into attack. Until we break this downtrend structure, there's just not a lot to do. You're probably too close to the bottom to be too aggressive with selling, and we don't have any real indicator that we're looking to break to the upside yet. So you can't, for me, I can't take longs until we do. So that's where we're at. Thanks, guys. Last question, and I'm going to wrap it. What about macro, Fed, geopolitics? My views will go lower than people think, and it may take a bit longer than people think, and then we'll go higher than people think. Even requesting, I don't know what that word is. So, yes, I went over the macro stuff earlier. So back up in the video a little bit, my thoughts on the macro situation. I think the market's very indecisive. I think there's too much money. Just very quickly summarize. I think there's too much money floating around. I look at the M2SL. I look at how much the money supply has been expanded by M2. Both the central bank and other, by the whole banking system, the fractional reserve system. I think the market's just indecisive. There's just too much money for a big sell-off right now, in my opinion. I think the most likely outcome is a lot of sideways price action, and maybe for the equities markets to be range-bound. Bitcoin, I think, is in a price range right now. I think it's toward the bottom of its trading range. I think the equities markets are establishing a sideways trading range. That's what I think is going on. I look at the DXY versus other fiats is pretty much indecisive right now. This is a measure against other fiats. I just see the market as very indecisive right now, trying to figure out, what is going to happen next. Is the Federal Reserve actually going to severely taper and completely cut off QE and aggressively raise interest rates? Then there's probably more downside in equities markets from here, especially if they were to move into a tightening environment. I believe that's going to break way too many things. I think the most likely outcome is the Fed simply slows QE purchases, gradually raises interest rates, and that simply puts a lid on equities markets for a little bit while we kind of range bound consolidate, and then even more upside. I think if the system were to break, the worst case scenario is it melts to the upside. So that's honestly the best case scenario is that we consolidate, and the Fed kind of gets control of a few things. The equities markets consolidate. There's too much money for it to sell off. But if they can put a lid on this thing and not let it do a blow off top, the worst case scenario is the whole system melts down and the dollar dies and it's a runaway problem. The banks can't, in general can't rein in the money supply problem, and it continues to just explode. And we actually, this is a fake out to the downside, and we actually blow off top. That's the worst case scenario. But if the equities markets blow off top, then probably Bitcoin's going to as well. So, take that. We'll take it one day at a time. I think, again, in my opinion, the most likely outcome is that the equities markets are establishing a trading range for some boring sideways price action for a while. That's what I think is most likely happening. And in that environment, the Fed probably isn't going to take too severe of action as long as they can keep this, in these bounds right here, roughly, right? And let the market cool off just a little bit. Try to put a lid on inflation, put a lid on a few things. That I think is the best case outcome for all parties involved. And if this were to happen, then there's no reason Bitcoin can't also just range trade in here. And then maybe we break out of this range on the back of a spot ETF or the next halving front running it or after it. Who knows? So that's my take on the broad markets. All right, guys. Thanks, everybody. Let's see if my Doge-wave will even work. I don't think it's going to. My outro Doge-wave music here, I think, is going to die on us.